Welcome to Equities.com. We're sitting here at the Vancouver Resource Investment Conference. My name is Galen Engen. I'm sitting here with Jared Lazerson, who is the CEO of MGX Minerals. Nice to see you.
Nice to see you, Galen.
You guys are doing some pretty interesting things. I mean, considering the market right now, the commodity prices, gold and copper, making people a little leery about these kinds of ventures. You guys have centered on something that's more vibrant. You guys are dealing with industrial and specialty minerals. Can you give us some, advantages of those particular ventures compared to other, classical VMS or other mining efforts?
Sure. Well, it's taking an approach that's smaller, one piece at a time. Industrial minerals, relatively stable markets, relatively small footprints, generally quarries as opposed to active mines with large processing plants. So we like minimal barriers to entry, which includes both CapEx and permitting issues. As well, one of the big advantages of industrial minerals, generally 90 to 100% ore, as opposed to copper, silver, gold, which generally are 99+% tailings. So we have, in large part, eliminated the tailings issue, which is a significant concern at this time in British Columbia.
Absolutely, it is, considering the whole Imperial Mines situation that went on up the province, as it were. Now, you guys have a deposit which is very large, incredibly high grade. Do you want to let us know about what Driftwood Creek has to offer?
Sure. Driftwood was originally explored in the 70s. There was a small pit put in, a quarry put in at that time. It was then drilled in the 90s. The resource estimates, the historical non-compliant resource estimates, were initially 22 million tons, and then that was upgraded to 28 million tons in the 90s. At this time, we're not concerned about defining that resource as a whole. It represents potentially 40 to 100 years of production. So we're not overly concerned with doing the traditional drill out and determining what the entire ore body is. We intend to put this into production ourselves, so we don't have the same impetus another or an exploration company, a gold company, for example, would have in drilling it out, because they would likely be looking to sell the property at some point to a major. In our case, we're putting it into production ourselves, so we're drilling out, or we've drilled out now, enough ore, or what we believe to be enough ore for initial production. That was our drill program in September. We drilled 8 holes to delineate an initial mining block. We got those results back in December. There were large sections of ore, up to 50 meters of what appears to be economic grade ore. It's enough for us to get going. So the first thing we did late December was file a mining lease with the Ministry of Energy and Mines. As of last Monday, that has been moved ahead to the consultancy period, or consultancy phase. So in terms of the deposit, many years, and where is it going? Into production.
So you guys are really going at this in an accelerated clip. That's pretty amazing. That's good. Now, Driftwood also has some competitive advantages in the sense of its location and such. Do you want to go into those?
Sure. It's in what we consider an ideal spot for mining. It's in a traditional mining area. There are a number of small quarries already operating in this area. It's quite remote. There's no homes or anything of significance in terms of major recreational areas. We're still haven't got our archaeological study back yet, but we have confidence, again, because of existing mines in that area and a long tradition of mining in the area, that these will be issues either that will be minor or that can be overcome with our stakeholders and various partners. So infrastructure, existing forestry roads, they would need somewhat of an upgrade, but in order to complete our access road, or our haul road, we already have the access road. We're looking at less than 2 kilometers of construction, relatively low cost, upgrading some of the forestry service roads. There's a rail line within 20 kilometers. As well, there are a number of existing industrial parks or old industrial facilities that would work for our processing plant within 150 kilometers. The key to us is we need access to natural gas. So Alberta probably has some of the lowest prices of natural gas in the world. We're right on the BC side of the Rockies from Alberta. So the major competitive advantage in terms of infrastructure is, one, it's there, we don't have to build anything major, but also we're very close to what would be the lowest cost natural gas, I would say probably anywhere in the developed world. that is a major cost advantage. So we can get the stuff to the processing plant and then pay very little for natural gas. We haven't done the numbers since the correction that's occurred in the oil and gas industry, but we're looking at potentially significantly greater profit now that is leveraged, again, because we're so close to the main source of natural gas in Canada.
Now, the market that you guys are going to put your initial focus in is the magnesium oxide market, which is explosive at this moment in terms of how we're having to import a lot of it, changing sort of geopolitical movement on the globe. Can you sort of give us a more in-depth?
You touched on one thing which always piques people's interest. The major reserves of magnesium oxide, or magnesite, which is the ore, are in China, Russia, and North Korea. So immediately people say, well, hey, this may be more of a strategic play than just an industrial minerals play. I'd rather not comment on that. There's a fair amount of magnesium compounds, magnesite, dolomite in the world. It's just a matter of finding a high enough grade, large enough deposit, because the deposits just tend to be very, very small. So the market on the economics, more than half, the better part of 2/3 of magnesium oxide being used in North America is being imported largely from China. An average price for magnesium oxide is $350 a ton. To ship from China, probably anywhere from $50 to $100 a ton. With this type of product, the transport is a major cost. It's also logistically a real headache to always have to go that far for your product. For us to be able to ship to the steel areas in the US where a huge amount of this is used, to put it on rail cars, have it there in 10 days or less, major advantage, not just in terms of cost, but also in terms of what the companies need to stockpile, so their cash flow and their inventory.
Sounds amazing. I mean, with magnesium oxide opportunities growing in the production of sheetrock, other industries, there's a tremendous growth as far as what's concerned with the sector, and you guys are slotting yourself right in there to take advantage of all that.
Absolutely.
I'm really thankful that you came to talk today, Jared. I mean, you've given us some really good stuff here to learn more about MGX Minerals, and I look forward to seeing how it progresses in the coming months.
Thank you.
Thank you very much for coming out.